Hello and welcome to the weekly outlook. Not There are quite a lot of announcements out on the euro next week regarding data. However, not really looking to trade the euro at this time. It is heavily there is a lot of sentiment on sell trades at the moment. We're looking for that to pull back quite substantially at some point. So taking sales on at the moment is a little bit risky. It may be that the data coming out next week could produce that pullback. We've got German ZEW on Tuesday, which is expected to come in better. We've also got the French manufacturing PMI expected to be better. German flash manufacturing PMI expected to be better as well. Retail sales is expected to drop slightly. But overall, we've got good data, so it could cause a bit of a pullback, especially with the weak US dollar. Although we did have a good University of Michigan report come out on the US at the end of the week last week. However, what we're really looking to trade is the Australian dollar. Now, we're going to be trading out of the data because it could go either way, really. So we're looking at really the Aussie dollar, US dollar at this time with the potential for it to rally back up to 8,000. Okay, now you can see here I've got a predicted trajectory of what I think will happen to the Aussie dollar over the coming months. This pattern isn't time indicative, so don't worry about the time scale down there. It could be that we don't reach this level until June, July, even August. So, but what I'm expecting to happen is we had that good employment figure come out for the Australian dollar. Unemployment dropped, and things actually look quite good. But it's quite strange that we're getting that figure because we've got bad consumer and business confidence at the moment. So it's a little bit sort of up in the air to how reliable that figure is. So what we're going to be looking at, we're going to be looking at the data on Monday evening at 12:30. We've got 12:30 p.m. actually in the afternoon. We've got RBA Governor Stevens speaking. Now, if he is dovish, then the Aussie dollar could sell off. However, after recent data, he may well be not as dovish as what the market was previously anticipating. Don't forget there was about a 56% chance of a rate hike by analysts, rate cut, on the Aussie dollar in May. That's been reduced considerably after that unemployment report. So we could be on for a further rally on the Aussie dollar. We've got the monetary policy meeting minutes as well later on. Just realised I haven't logged into my calendar, which is why it's got funny times there. So what we're looking for really is for it to pull back a little bit further. I'm looking for it to go back to about the 8,000 level. You can see I've got a dotted line here because initially 7.9 may only reach 7.9. It's going to depend on the data, which is why I'm going to be trading out of it. If the data is really good for the Aussie dollar, if the monetary policy meeting minutes is quite hawkish and Governor Stevens is quite hawkish, then I'm going to wait to sell it off from 8,000. If, however, it's not as hawkish as it could be, then 7,900 will be the target to start selling. And I'm going to look to sell this off back down to 7.5. You can see there again, I've got a dotted line because it's going to depend how that sell trade progresses through the next few months to whether it will actually reach 7.3 or not. A lot of analysts are suggesting 7.3 for the Aussie dollar, even 6.9. Now, why do I think it's going to sell off? Well, purely because the RBA, even if the economy is improving, they're going to try and talk the currency down. They want to keep the Australian dollar low because it's very reliant on export. One of their biggest exports is iron ore to China. They want to keep their dollar low so that people will buy the export goods. Okay, so even if the RBA, even if the economy is improving, they're still going to try and keep the dollar down. And don't forget, we've still got a US dollar rate hike on the cards, possibly still in June, so we could still see this reaching down to that target by June. In the second half of the year, I am looking to buy the Australian dollar back as iron ore starts to improve. Once the rate hike is out of the way from the US dollar, I think after the US dollar, the United States has had their first rate hike, then all the upheaval about their rate hike will sort of dissipate into the background, and it won't be such a frontline piece of news anymore, and people won't really be that interested in these very small rate hikes that are gonna happen over a long period of time. Okay, so that's really my analysis. So it's going to be based on Monday, what happens on Monday and Tuesday on the Australian dollar, to when we actually take this for a sell. It's either going to be at 7.9 or it's going to be at 8,000, and then I'm going to be looking to hold that trade down to the 7.5 area over the coming weeks. Okay, so thanks for watching, and I hope you can make some pips from that.